Hi, IBD. I'm Meredith Heyman. This is IBD Explains. Thanks so much for joining me. The Federal Reserve's rate cut decisions are likely to set the tone for the economy and investors in 2025. So, how will the incoming presidential administration impact the central bank? And what will new Fed decisions mean for the stock market and the powerful AI industry? Joining me to break it all down is IBD News editor Ed Carson. Ed, what is the market projecting for rate cuts in 2025?
Well, after one more rate cut in 2024, in December was the plan. There's the plan for that. Not much going on for several months. I think the next time when it seems is maybe not until mid-year that we would have another cut. And with Fed forecasts are a little bit like weather forecasts. With weather forecasts, after 2 or 3 days, you go like, well, maybe that'll happen, maybe it won't. And with Fed meetings, after 2 or 3 meetings, it's like, well, maybe that'll happen, maybe it won't. All it will take is, one inflation report or one jobs report or one policy statement from Trump, and everybody might, change their minds on how things are looking out. But right now, I think the thing is that the economy is holding up better than people expected a couple months ago, and inflation may be a little stickier than people thought. And so it's like, well, the Fed may not feel much of a need to cut after a few cuts in 2024.
So likely one more cut in 2024 for the year, and then we'll see what happens in the spring. What would the implications be for investors?
I think if you kept it right here, look, if the economy is going pretty well and inflation isn't getting out of control, if inflation really spiked up again, that would be a concern. But if you have strong economic growth and inflation at least holding steady at a little bit too high level, I think investors would take that. I mean, I think that's honestly, it's always nice to have that tailwind of there's always another Fed cut. But if the reason why the Fed isn't cutting is because the economy is doing so well, investors are probably going to be pretty happy in that kind of scenario.
And how will the incoming Trump administration, as you said, this could be make or break for potential cuts come next year? How will it influence the Fed likely in 2025?
We don't know. And I think the Fed doesn't really know. And the Fed doesn't want to say anything right now. I mean, some of the stuff what the Fed is doing is like deregulation or tax cuts and other things. They might improve economic growth. So that would be something, but maybe not in an inflationary way, but it would certainly boost economic growth. You might see immigration deportations. You might see tight labor markets as a result of deportations and see price increases there. Tariff hikes could have both an inflationary effect. It could also slow the economy in other ways. It's hard to know what will be actually happening, what will actually Trump and the GOP-led Congress do, and when will they do it? If they cut taxes in 2025 and then do more tariffs in 2026, that's a different scenario for the Fed than if they say, we're going to raise tariffs on day one, which Trump has gone back and forth on, and tax cuts don't come till later. So it really does matter what policies and when and to what extent.
And what will the Fed's decisions on rate cuts mean for the stock market, do you expect?
Yeah, I mean, lower rates are positive, especially if it's lower yields. If it translates into lower market yields as well, that is a positive for the stock market because generally we discount future growth. Like for growth stocks in particular, you use a discount rate to what future profits are, and so if we have lower Fed rates and lower Treasury yields, then people will see, I'll price in more of the future growth now, and so that's always a positive. But the Fed seems to have engineered a soft landing, and that was part of the reason why the market's done so well in 2024. We're getting some rate cuts, but the Fed has managed to bring down inflation without causing a recession, which wasn't necessarily clear at all was what was going to happen. That's not easy to do, so it could be more of a steady state in that regard. So the market is probably be okay with, again, a flattish Fed policy or very modest rate cuts if that is because the economy is doing well.
And how will interest rates affect big tech and the continued AI boom?
Yeah, that's where some of that growth plays come into, is that the growth stocks like that lower yield because then you can say, well, I'm going to price in expected earnings from 2030, today. And so there's some of that, and that'll make a difference. But those have been areas that have been growth leaders. There's definitely other factors like that are going on. Can those stocks continue to make some of these stocks have had enormous moves. And so whether or not the Fed is doing this or that, can they continue to make that kind of move? That might be harder to sustain because some of these have gone up 100%, 200%, 300% this year. But the AI revolution in some of those seems like something that's going to overpower any kind of policy. It's just a matter of which one, Fed policy will always have an impact on valuations and such, and so that'll be important. But I think AI is just something that's well and beyond the economic growth trends of here and now.
But a lot unknown come 2025, just a few weeks. How should investors react and prepare for possible market volatility following rate cut decisions?
Yeah, I mean, it'll be interesting to how much surprise there is. And it's usually they're not decisions, it's those outlooks, because people will know going in, okay, they're going to cut or they're not going to cut. The Fed has been pretty good about that. They don't really shock people too much, though they did with the size of that first rate cut, I'll admit. But generally be that outlook. If Powell says, you know what, we're never cutting rates again. I mean, he's not going to say that, but if he says, it's starting to become an even bet. We may need to hike rates. That would be like, whoa. So if the Fed changes perception, you have to remember that the Fed policy meetings are sort of like an earnings report for the market. You just don't know. You may go in thinking everything's going to be tame, or you're pretty positive. You just don't know. And so you just have to be ready to react to that, not be too exposed and not take knee-jerk reactions to Fed meetings, but also not be deer in the headlights to the outcomes of those Fed meetings.
All right, Ed. Well, we'll be watching. Thanks so much for joining me. This is IBD Explains. I'm Meredith Heyman. Stay right here on IBD for more. We'll see you next time.